I guess we'll see. Gold and silver are money, and they have been for 5,000 years. They've outlived everything the world's thrown at it, Peter. Two world wars, German hyperinflation, the Great Depression. We will not lose gold's appeal. And the central bankers of the world, the most powerful people in the world who know the playbook, they're showing us that. They're doubling down what they're buying. They're increasing. Since Trump has won the election, they've doubled 2 months in a row their 12-month moving average. And the repatriation, pulling it and bringing it home from the Bank of England, from the New York Fed, or taking delivery off of COMEX or the LBMA, 55 million ounces, either 45 or 55. Let's just call it 50 million ounces. I'm real close. Were delivered in silver off of COMEX just in the month of December. Where is it going? Who's got the money?
Several key factors have driven recent increases in gold prices. These include heightened tensions globally, especially involving major powers like the US, Russia, and China, which have created instability in financial markets. Investors turn to gold as a safe haven asset to hedge against potential crises. Most central banks hold gold as part of their foreign exchange reserves. For example, China holds around 5.5% of its $3.2 trillion total foreign reserves in gold. There is a growing trend for global central banks to diversify away from the US dollar, which has long been considered the global reserve currency. This growing de-dollarisation trend could provide an additional boost to gold prices. Owner of Miles Franklin, AndySchectman underscores gold and silver's 5,000-year history as resilient money, surviving global crises. Schectman notes a global flight to safety as central banks made their third-largest gold purchases in 2024. He predicts a shift to a Bretton Woods III system, prioritizing commodity-backed currencies over fiat. Due to shifting global trade dynamics, Schectman foresees a rising reliance on local currencies and gold, reducing US dollar dominance. He critiques the BIS's withdrawal from bridge, calling it economic sabotage, and emphasizes BRICS nations' strategic adaptations. The US dollar's global reserve share has hit a 30-year low, signaling declining confidence in its stability. He emphasizes regional trade agreements, such as China's decision to import commodities from Brazil instead of the US, settling transactions in yuan or local currencies, with gold used to address trade imbalances. According to Schectman, these trends rapidly unfold and reshape global economic dynamics. China's share of U.S. trade grew from 1.4% in 1985 to a peak of 15% during 2015 to 2018. However, following the start of the trade war in 2018, this share also declined, reaching 10% in 2023. Now, we present the clips of AndySchectman's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Well, I think there's a flight to safety. It's accelerating. Central bank purchases. In the first 11 months of 2024, we didn't get the December numbers yet, but it's the third largest in this century. I think we're witnessing, I guess you could say, a Bretton Woods III, a new world monetary order. I think it's centered around more around currency-based commodity-based platforms rather than fiat currency-based. De-dollarisation, of course, is no longer a fringe theory whatsoever, and it's driven by a lot of things, mostly the weaponization of the dollar, but also the Federal Reserve's rapid policy shifts as well. They cause concern. In crises, the Fed inject a tremendous amount of liquidity into the system through quantitative easing and suppress interest rates. We've seen that. And the byproduct, when inflation starts to rise, or the other side of the coin, is they reverse course and with sharp rate hikes. And you can see the disruption that's caused. And now they're kind of caught in the middle. I think we can see commodity trades and settlement shifts in away from the dollar and local currencies and in gold, all certainly across the Southern Hemisphere. This erodes the demand for the dollar or the necessity to hold it. Facilitating trade settlement outside the dollar is really a big thing that I see increasing here in 2025 over things like bridge and its successor BRICS bridge, because what the BIS did to the BRICS, Bank of International Settlement did to the BRICS at the 12th hour, and they're meeting in Kazan pulling out of bridge. After 4 years of their innovation hub supporting it and helping develop it with China, Hong Kong, Thailand, the UAE, and then ultimately Saudi Arabia. saying at the 12th hour we can't be involved with any countries that have sanctions like Russia, as if they just realized that R was stood for Russia in the BRICS after 4 years of helping develop this program. It's espionage. To me, it's James Bond. It's right out of its Bond movie, and I think it will crystallize and reinforce the BRICS resolve. Regional trade agreements, obviously, that's we're seeing more of that. China buying corn, let's say, from Brazil, the second largest exporter of corn in the world, and soybeans, canceling the same time contracts with the U.S. and Australia, buying it from Brazil, paying for it in yuan, settling in their local currencies, settling any trade imbalances with gold. It's happening. It's happening in real time. These are all accelerating.
Gold prices rose to the highest levels in around 4 weeks on Wednesday to $2,657 per ounce. Recent shifts in equity markets and concerns about U.S. economic policies have amplified demand for gold, with prices reaching record highs in early 2025. Seasoned traders, including AndySchectman, discuss the global trend of central banks doubling down on gold purchases, with recent figures showing acquisitions twice the 12-month average. He highlights China's and Saudi Arabia's covert gold imports and their preference for buying more and concentrate directly from miners. With BRICS nations holding 15% of global gold reserves and shifting away from the US dollar, AndySchectman sees gold as the top asset. The dollar's share of foreign reserves has dropped to its lowest since 1994, while gold's 180% rise since 2008 underscores its growing appeal in today's economy. As of mid-2024, BRICS nations collectively held 5,700 tons of gold, representing 16% of global reserves. Over the past 2 decades, these reserves have grown threefold, reflecting an effort to reduce dependence on the dollar and bolster their own nation's financial stability. Let's get back to the interview.
The central banks have doubled down their purchases in gold over the last several months. In November and December, or October and November, the last 2 months, I'm not sure if December came up yet, but their numbers were twice the 12-month moving average. One of the things that I find interesting is that China and Saudi Arabia have both been caught recently importing gold that they did not report to the IMF. They said that China said they stopped buying gold. They hadn't done that. In fact, there was an estimation that was just this came out on several news sources saying that they said they bought 5 tons. Recently, they think it's 55 tons, 10 times underestimating what they said. The import-export numbers caught both Saudi Arabia and China importing gold through the UK and Switzerland. They never reported it to the IMF. Sorry, it was a mistake, more or less. And as we've talked about ad nauseum, China, when they buy gold through the People's Liberation Army, or when they buy gold that is not 999 pure, it's not reported to the IMF. And I'll get to that in a moment. When the proxy banks, the commercial banks, buy on behalf of the PBOC, it's not reported to the IMF. But when you talk about what China has been doing, they've been flying all around the world, buying doré and concentrate from the miners directly, disintermediating the marketplace. They're the largest producers. They're the largest importers. They are a net importer. They have an insatiable appetite for gold. It's just beginning. And so we can continue to talk about how much gold the central banks are buying, but it has not stopped. The IMF says that central bank gold holdings have gone up to 1.16 billion troy ounces, and growing. And they're the largest holders of gold on the planet. They understand this. The trend for this to continue, it's not stopping. When we talk about BRICS, you have, I guess I would call it a shadow supply chain, not just in gold, but also in silver. They're bypassing the traditional markets. They're buying doré and concentrate. In fact, 75% of all the industrial silver they're using now is coming from concentrate. It's a sludge that goes right that the miners have, and they scoop up the sludge. They sell it for pennies on the dollar. China's paying double what the West will pay and refining it back in China. And so this is the second largest producer of silver in the world, a net importer, buying gold directly from the miners in South America to disintermediate the marketplace. No one has any idea how much they're buying. This is going to be the new trend. because of what the West did, because of what BIS did, and in essence, at the 12th hour, embarrassed them and pulled out and called out Russia as someone that they could not be part of this new cross-border payment plan with when it was developed in their innovation hub 4 years ago with these countries. It's criminal. So now everything that you see is going to be more and more and more opaque. We see 9 new countries that have joined as their partner country. They're not a full member, except one of them became a full member, and that's Indonesia, the largest the largest um, holder of nickel in the world in the ground in Indonesia. Their president Widodo has called for an OPEC style cartel of rare earth metals. Almost all of them are mined or found in the Eurasian continent, and this is something that again it's only going to get worse because 100% of rare earths are refined in China the last few years, and the majority of it are mined in these areas. But you have Belarus, Bolivia, Indonesia, who is now a full member, Kazakhstan, Cuba, Malaysia, Thailand, Uganda, Uzbekistan. As it is right now, they hold 15% of the world's gold reserves, 30% of the world's land mass, 40% of the world's population, and 54% of global GDP. Not to mention, they control the majority of the strategic routes on sea and many on land. They're growing. And when you look at the foreign reserves that these countries hold, the dollar share of foreign reserves.
Gold's allure has captivated not only everyday individuals but also major investors, including national central banks and large corporations, with its value surging tenfold since 2000. As BRICS nations bolster their gold reserves and pursue de-dollarisation, gold's role in reshaping the global financial system continues to grow in importance. How do you see gold's role evolving in the global monetary system, and what could impact its growth as a primary asset? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.